starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. We have plenty lined up for you today, so let's get started with a look at the day's highlights. As Korea's shipbuilding industry gets ready for a massive restructuring, a latest report suggests that the sector will continue to struggle amid slumping new orders. We're expecting a large number of foreigners traveling to Korea this month as the country gears up to host the 107th Rotary International Convention. These stories and more coming right up. But first, the OECD has cut Korea's growth outlook for this year to 2.7%, joining a number of institutions that have slashed the country's forecast to the 2% range. The downgrade is a 0.4 percentage point cut from its previous outlook, and the organization cited Korea's aging population and slumping exports as risks the country's economy is facing. It also pointed to the rapid rise in household debt and the slowing Chinese economy as factors that could further dent the country's pace of expansion. The OECD's Korea desk head Randall Jones says Korea has room for more expansionary fiscal and monetary policies, although such short-term measures cannot be a cure-all for tackling prolonged low growth. The OECD expects Korea to grow 3% next year, also down 0.6 percentage point from its previous outlook. Indonesian President Joko Widodo is in Korea for his state visit. And this morning, he attended a business forum with Korea's trade minister and about 400 local entrepreneurs. During the forum held in Seoul, President Widodo stressed that economic reforms helped open up the Indonesian economy and said he will focus more on simplifying local regulations to create an investment-friendly business environment. At the event, Korea and Indonesia finalized several MOUs worth roughly $2 billion for projects in solar energy, power plant construction, and more. The Indonesian leader also met with President Park Geun-hye this afternoon.
A few weeks ago.
And to tell us more about last week and this week's stock market action, we have our Business Daily's markets contributor, Choi Jin-seok, joining us on the phone today. Hello, Jin-seok.
Thanks for having me, Jin.
All right, let's get started by looking at the Korean stock market. Tell us about the last day of trade and the market's overall performance last week.
Yes, the Korean equity market's two indices both fell on Friday. The Kospi plummeted by 0.5% to close at 1966. The sell-off by both foreign investors and institutions dragged down the index. The Kospi fell by 0.1% to close at 704, recording the first decline in 4 sessions. A sharp decline in Apple share price hit investor sentiment in the IT sector, dragging down the sector by almost 2%. On a weekly basis, the Kospi slid 0.4%, extending its losing streak to 3 weeks. Meanwhile, the Kospi rose by 1.4% last week. Performance of blue-chip stocks played a large part in this mixed picture between the two markets. Share prices of large caps on the Kospi, including Samsung Electronics, Hyundai Motor Group, and POSCO, fell sharply, while Kakao, CJ E&M, and Comtus on the Kospi market all enjoyed a share price rally.
Then how did the Korean stock market close on the first day of this week?
Yeah, the Kospi didn't move much on the first session of this week. The index briefly surpassed 1970, but it soon gave up early gains to close at 1967, up 0.05% compared to the previous session. The heavy sell-off by institutional investors was the negative catalyst in today's market. The Kospi fell by 0.4% to close just above 700. Like today, low volatility has been this year's trend so far in the Korean equity market. The market capitalization of Korea's benchmark Kospi has gained 0.7% since the beginning of the year, while the nation's 10 largest groups shed over 2%. According to Korea Exchange on Monday, the combined market cap of the top 10 groups made up 53.17% of the market, down 1.53 percentage points from the end of last year. Out of the top 10, Hanjin Group's market cap fell by the most by over 10%, weighed heavily by Hanjin Shipping, which saw a 45% drop in stock prices. Samsung Engineering and Samsung Heavy Industries followed.
Now, like last week, investors are expected to pay a lot of attention to global economic data this week.
That's right. Positive economic data from the U.S., including a 1.3% increase in April retail sales, didn't help global equity markets last week, rather dragging down all three indices in the U.S. market. Investors are expected to take a close look at the overall picture of the world's largest economy this week as well. Along with April consumer prices reported on Tuesday local time, a number of manufacturing and housing market indicators will be released this week. Since consumption, which accounts for 70% of the U.S. economy, showed robust results last week, experts expect the Q2 growth figure to come in around 2.5%. If this week's data can keep the positive momentum going. There still is a possibility that good data can trigger the Federal Reserve or the Fed to raise its benchmark interest rate. In this sense, the FOMC minutes from April, which will be released on Wednesday, will provide some broader hints about where the Fed is headed.
Now, the G7 finance minister meeting is considered another important market event this week.
Yeah, finance ministers from the world's 7 largest developed economies and central bank officials will convene in Japan this Friday. In-depth discussions on monetary and fiscal policies and issues of tax evasion are expected to take place during the meeting. In particular, the global foreign exchange market is giving a lot of attention to this meeting, since after the G20 meeting in February, there has been a sharp decline in the value of the US dollar. There have been rumors that countries had agreed on a dollar depreciation back at that meeting. The Financial Times reported that Japan wants to bring about a yen depreciation through the meeting this week. The Japanese economy and equity market have suffered from a yen appreciation prompted by the Bank of Japan's unexpected decision not to increase its asset purchase program, and despite its negative interest rate policy. But the Financial Times also pointed out that strong opposition is expected from other member states towards Japan's foreign exchange market intervention. So it will be interesting to see how each state's policy stance and currency values change after the meeting. This has been Choi Seok for Business Daily.
With continuing unfavorable conditions and a lack of new orders clouding the future of Korean shipyards, the nation's 3 biggest shipbuilders are expected to cut production and move forward on their plans for restructuring. Our Kim Min-ji reports.
Korea's ailing shipbuilding industry can't seem to catch a break, with its woes likely to continue into the foreseeable future. According to a report by a research institute of the Export and Import Bank of Korea, the volume of new orders worldwide amounted to 2.3 million compensated gross tons, which is the amount of work that is necessary to build a given ship as of the first quarter. That's down over 70% from the same period last year. For Korea, the figure stood at 170,000 CGT, down 94% from the year before. The figure for the whole year is expected to come to 1.6 million CGT, down 85% from last year. In a reflection of the dire situation, the nation's 3 biggest shipbuilders are set to cut production capacity as part of a larger restructuring effort. According to industry sources, Hyundai Heavy Industries has decided to tentatively close its dockyards, while both Daewoo Shipbuilding and Marine Engineering and Samsung Heavy Industries are expected to follow suit. Although the dockyards are all fully operational at the moment, the closures are expected to take place once existing orders are complete, starting with the yards deemed the most inefficient. In fact, the restructuring effort for the Big 3 is expected to kick off in full this week. Hyundai Heavy Industries submitted its restructuring plan to its creditors last week. It's accepting voluntary resignations from staff and pushing to sell the assets of smaller subsidiaries. Daewoo Shipbuilding and Marine Engineering is expected to draw up a rescue plan that includes a cut in workers, wages, and facilities, and could submit it to creditors by the end of May. Samsung Heavy Industries is also slated to hand in a similar rescue plan later this month. Kim Min-ji, Business Daily.
The domestic job market was without a significant pickup in April again. The number of people employed inched up 1% compared to the same time last year, but a big dip in new hires in one particular field is raising fresh concerns. Our Lee Joo-young has the story.
Conditions in Korea's labor market still remain sour, and university students who have yet to enter the job scene are already feeling the blow, with youth unemployment reaching over 10% in April.
It's so hard to get employed these days. When I meet my seniors, that's all we talk about.
I'm a junior right now. I'm thinking of maybe going to graduate school or working for a small company, even if it's a contract position.
When it comes to the overall employment rate, according to Statistics Korea, it fell for 2 consecutive months from December before rebounding slightly in March, only to dip again to 1% last month. But zone in on manufacturing jobs and an alarming trend emerges. While manufacturing work accounted for over 40% of all jobs added in the month of January to March, that figure nosedived to 19% in April, hitting the lowest level in over 2 years. Experts say this is due to a 16-month-long fall in exports, coupled with massive contractions in manufacturing output. Under these circumstances, they add corporate restructuring in ailing sectors like shipbuilding and shipping will only aggravate the situation.
Once corporate restructuring gets fully underway, employment instability may spread to those in their 40s and 50s as well.
And with 20 to 30,000 people just in the shipbuilding sector projected to lose their jobs over the next 3 months, experts are calling for measures from the government to mitigate the impact and prevent domestic demand from sliding any further. Lee Joo-young, Business Daily.
Online sales of virtual reality devices have jumped this year after global attention was drawn to the industry at this year's Mobile World Congress. According to local online market 11th Street, sales of VR devices from the beginning of the year up to May 12th jumped tenfold compared to the same period last year. According to the retailer, demand rose sharply over the past few months, especially after Samsung released its Gear VR headset last November. Online retailers Gmarket and Auction also saw a steep rise in sales, and according to Gmarket, the VR market is expected to take off as contents expand and prices drop. The price of local beef is on the rise. According to Statistics Korea, beef prices spiked more than 18% in April from a year ago, marking the biggest on-year jump in 6 years. The average price of hanu, as it's called here in Korea, has been going up since the end of last year. In October of last year, prices rose more than 12%, but this year, the increases have become even more pronounced, rising between 14 to 18%. The rise in prices comes on the back of a drop in livestock numbers. Local farms have reduced their stocks since prices fell sharply 3 years ago. And due to the Korea-US Free Trade Agreement, the government supported the shutdown of farms to maintain local prices. Over the same period, the price of imported beef edged up just over 2%. Korea will see another influx of travelers at the end of this month, with this year's Rotary International Convention being hosted here. And there's a call to expand the country's infrastructure to facilitate such large-scale events from so-called MICE groups. Our Eunice Kim has more.
In less than 2 weeks, Kintex in Ilsan will host the 107th Rotary International Convention, bringing together 25,000 people from 160 countries, plus 25,000 Rotarians here at home.
It's not just an event for Rotarians. It will contribute to Korea in many ways.
Korea Tourism Organization estimates the convention will have a production inducement effect worth more than $250 million, while creating some 1,800 jobs. It has prepared 25 tourism programs that include visits to World Heritage Sites on Jeju Island, the demilitarized zone, and Jeonju Hanok Village.
We hope they'll see how developed our tourism industry is and share it back at home.
More attention is being given to the MICE industry, large-scale travel groups that come for meetings, incentive trips, conventions, and exhibitions. 4,500 employees of China's Arirang Group who enjoyed a chicken and beer party, and 8,000 staff of China's Zhongmai Group who slurped up chicken and ginseng soup samgyetang in early May are examples of MICE travel. In light of the mass incoming traffic, one research group is shedding light on the need for more infrastructure. It notes Korea's largest convention center, Kintex, only ranked 42nd in the world, while next up COEX at 47,000 square meters came in at 190th. Accommodations were also inadequate, with 0.2 hotel rooms available per 100 people, ranking in the bottom half of 141 countries surveyed.
Korea is well behind places like China in hosting large conventions. If we don't have the infrastructure, securing these MICE visitors becomes impossible.
When it comes to hosting global meetings, as of now, Korea ranks in the top 5. The country expects to see 280,000 incentive travelers this year, meaning it will need to keep building to keep the momentum going. Eunice Kim, Business Daily.
And that wraps it up for today. Thanks so much for watching, and we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Have a great start to your week.